Welcome back. Still watching Business Morning live on Channels Television. Now let's head on to the commodities market update. Now we have Dr. Desola Sumoni joining us right there from Reading. Great to have you on the program.
Hi, Ladi. Thank you for having me on the show today.
Yeah. So the last time we spoke, we were talking about a possible output cut of about 1 million. But there we have it. It's official. It's 2 million barrels per day. Was this in line with your expectations?
Thank you for that question, Ladi. This came as a surprise to me and to the market, as a matter of fact. OPEC, we expected a cut of about 1 million barrels per day starting next month, but OPEC Plus surprised everyone and agreed to cut output by around 2 million barrels per day. You could see the surprise in the market. Prices increased quite sharply, once the announcement was made to, I think, around $93 per barrel. Now, this effectively, the actual decline in output would be much less. It would be around 1 million to 1.1 million barrels per day, simply because many OPEC countries are still struggling to meet their production target. As I said earlier, Ladi, as of last month, as of August, OPEC Plus missed its production target by around 3.6 million barrels per day. This, nonetheless, I think the West is not happy. A lot of countries are not happy with the sharp cuts in production in production from OPEC Plus, because this is likely to keep oil prices elevated. I mean, some analysts have already forecast that oil prices are likely to reach around $100 per barrel in the coming days. So this, this production cut is likely to keep prices elevated, which is also going to keep, it's likely to keep oil prices elevated, which is going to keep petrol prices elevated in many countries, as well as it's going to keep inflation elevated as well, which means that, the tightening cycle and the tightness in the financial system the global financial system that we are experiencing currently is likely to persist even longer.
And talking about rising prices, it seems like OPEC doesn't care about inflation right now.
I mean, inflation where, right? OPEC is probably in many oil exporting countries, they're not really experiencing high inflation as other developing countries. So it depends on where, where are we seeing this hike in inflation. For OPEC, I think one of their rationales is to kind of, because oil prices was already declining from the highs it had reached earlier in the year, and for them, this was a means to, stabilize the market. At least that was the justification they are giving for the oil price, the cuts in their production. Obviously, it's going to hurt a lot of oil importing countries, particularly in the US, because of gas prices are currently high and they're likely to remain elevated given the cuts in production from OPEC.
Now, we know Biden is not, going to be happy. Is obviously not happy, with this, even though, the U.S. stands to gain, from rising oil prices, but he wants some stability in that market. But let's bring it down here now. How's this going to impact Nigeria, really?
I think for Nigeria, we need to think of the impact in 3 steps. One is what would Nigeria's new production quota be, right? Currently, Nigeria's production quota is around, I think, 1.8 million barrels a day. But Nigeria is really struggling to meet up with that as of, I think, August. As of August, Nigeria's production was around 927,000 barrels per day. So that means Nigeria was only producing half of its production quota. Even before that, it was around 1.1 million barrels per day. So that shows that, Nigeria is kind of struggling. I think that the revised target for Nigeria would be slightly less than 1.8 million barrels per day, because we expect that the biggest cuts are going to come from Saudi Arabia, Kuwait, UAE, and some other countries in the GCC. So for Nigeria, I think the revision would be low. So that is on one hand. On the other hand is how much Nigeria is going to be able to, gain from this higher oil price environment. Like I said already, Nigeria is not able to, meet its production quota, production target. So even though the prices in the global commodities markets remain elevated, and Nigeria is not able to really reap the benefits. And I think that's also because of issues of vandalism, issues of or theft of oil and years of underinvestment in oil infrastructure. So these factors mean that Nigeria may not be able to fully reap some of the benefits of this higher oil price environment. I mean, I read a paper last week saying that, Nigeria is considering to reopen the Trans-Niger pipeline, which supplies, I think, around 180,000 barrels of oil, and that has been under force majeure for about 6 months. So if that is reopened, I think that can contribute to Nigeria's oil production.
Right, and the oil theft issue, that's another story for another day. But, we've heard about the cap, the price cap on Russian oil, and we know Russia is not having it. They're not having any of that, at this point. But it looks like oil prices, with what's happening with Russia, it might break that all-time high soon.
I think for now, oil markets are going to remain volatile as long as Russia continues its war in Ukraine, and the West continue to mount sanctions on Russia. So I think, given that context or given that backdrop, I think oil prices are going to remain quite volatile and also elevated in the near to medium term. Like you said, so the G7 are considering, in principle, they've agreed, some sanctions on some caps on Russian oil, on Russian oil exports, and like you said, Russia has come to say that, anyone who wants to buy our oil at a cap are not going to sell to them. So there's this kind of tug of war, tussle between the West and Russia. The West wants to, punish Russia for its war in Ukraine, and Russia is kind of like resisting it because the West feels or believes that, oil essentially contributes to provides financial resources for Russia to continue to carry out its war in Ukraine. As a matter of fact, oil exports account for around 45% of Russia's total revenue. So it's quite huge, and so that is what is happening. So I think that as long as this tussle continues, and as long as Russia continues its war in Ukraine, and the West tries to mount pressure on Russia and to try to squeeze the financial resources of Russia, I think prices are going to remain elevated.
Right, and obviously a couple of traders and investors, whoever invested in the equities market, that's global equities market, before February, you're in major loss. But if you bought oil, at that time, you'd be smiling to the bank, when it hit that high. But now, I know some people are on the sidelines, and they're like, should I still go into the oil market? At this time, can I still get some upside? What do you think?
It puts me in a tight spot. Anyway, I'll say that, I think prices are quite volatile now. Oil is, kind of a high risk, high reward kind of investment. So the outlook is that, oil prices are still likely to trend upwards in the near to medium term. So I'll put it as that.
Right. No target at this point. All right. So what's happening with, we see the Ivory Coast harvest there, it rising despite, issues they're having in this country. How are you seeing that? So
Ivory Coast is the biggest producer of cocoa in the world. And earlier in the year, they had issues with excess dryness, which, they expected to affect the harvest of cocoa in the country. But surprisingly, the latest numbers coming from the Ministry of Agriculture in Ivory Coast suggest that, for the 2021-2022 marketing year, Ivory Coast harvested around 2.2 million tons of cocoa, which was up around 2% from the last marketing year, where they harvested about 2.1 million tons of cocoa. So they saw, the expected lower harvest, but I think surprisingly, the harvest came in larger than expected. And that is also having an effect on prices because of this huge increase in supply and this bumper harvest coming out of Ivory Coast against expectations of, lower harvest. I think cocoa prices now in the global markets are trending lower.
And we also see wheat prices also tending downward, despite what we're seeing in the Black Sea. Do you think this downtrend will continue? Because I don't know. I feel like commodities are still going to remain really high.
Yes, Ladi, you're absolutely correct. Because of, I think commodities market generally are in a very, very volatile period now. So, and they are driven by big sentiments, but particularly the Russia's war in Ukraine is a very big driver, particularly because both Russia and Ukraine are very huge exporters of wheat. So I think that the price of wheat, even though it is trending downwards now, I think it's going to trend back upwards in the near to medium term because of this Russia's war in Ukraine. I think it's still going to trend upwards in the near to medium term.
And what's happening in the domestic commodities market? We're seeing the price of Gary rice tending upward, but beans seems to be going down.
Yes, generally prices of many of these commodities are trending upwards, particularly because of one, exchange rate pressures. So many commodities that are exchange rate sensitive will see the prices of these commodities trending upwards. But in addition, we are seeing high logistics costs in the country. The price of diesel, like I mentioned, has increased quite significantly, and diesel is an important component, in transporting some of these agricultural commodities across the country. So as the price of diesel is trending upwards, tracking the prices of oil in the global commodities market, we are also going to see the prices of some of these commodities continue to trend upwards.
All right, Dr. Adesola Sumoni, it was great having your perspective on the show.
Thank you for having me.